Hello, guys. Welcome back to the studio. It's been a while, right, John?
Oh yeah, miss it.
Now, today, or in this week's quick dive, we're going to talk about three very important developments, I would say, in the Bursa Malaysia stock market. The first is that investor confidence seems to be coming back. But the question is this a dead cat bounce, or is it going to be more sustainable? Second thing, a really big investor in the form of MAA has acquired shares in KNM Group. That's huge because they've not been doing well. And number three, we talk about Genting and how good Resorts World in Las Vegas is doing. And of course, the question is this good enough to turn Genting's fortunes around?
So are you struggling to build your 6 to 7 figure portfolio? MJ and I, through our combined experience of 20 years, showed it to you in a step-by-step manner through our Masterclass. You can find the registration in the comments section below.
Okay, John. So let's start with investor confidence. I think if you've been following the market, especially since the 2018 election, the Malaysian stock market has not been doing very well.
That's right.
And a lot of foreign investors are leaving. Right, and you can see in the graphics, right, on the screen, it's not been doing well, right? The investors have been leaving, but in the past few months or so, they seem to be coming back, and it seems to me they're quite positive with the new changes in the government, which is kind of ironic because everyone thought that the old government, the pre-2018 government, was not so good. Therefore, economy will do bad. But now the reverse is true.
Yeah.
Right. So to start off, right, what are your thoughts?
Stability, I think it's something that a lot of investors, especially foreign investors, thrive on. And I think probably they want proven hands. I mean, UMNO has been the ruling quote unquote, probably the party that in a way one ring to rule them all.
Yeah. Oh, that's actually the PAP in Singapore, but that's okay.
It's true.
We're not talking about Singapore today.
Correct.
But.
And if you look at this, it's quite sobering. 3.5 years of strong selling, and even though as Malaysian citizens you want a change, you want a less corrupt government and all that. But the foreign investors, they don't vote with their words.
They disagree with you.
Yeah, they vote with their money and their feet.
Absolutely.
And just last week, MIDF released their, Bursa actually, sorry, not MIDF, but MIDF compiled the data. And the foreigners are coming back in droves. Yeah, and not small amount is 1 billion worth of equities. Obviously not as high as during the peak, during the great times the bull market runs, but retailers used to be 2020. The retailers were champions.
Oh yeah.
Today, foreigners are coming back in droves, especially a lot of institutional money coming back. I think it says something, the unwritten kind of message they're trying to send, and hopefully with the economy opening up.
Yep.
Hopefully with some sort of stability in the government going forward, because we are another 2 years away from election.
Yeah, another election. Yep.
Yeah, and I think if this continues to see this new wave of foreign investors coming in, I think it bodes well to our Malaysian economy.
Yeah, I think it's a new era for the Malaysian stock market for a few reasons, right? So the first is that the foreign investors are returning.
Yeah.
We don't know, again, in 2 years' time, the election, what's it going to be like.
Yeah.
But let's say if it's the same, right? I mean, the same as it has always been except 2018.
Yeah.
Then foreign investors will come back. Plus this new group of younger investors. That are heading into the stock market. And what we've seen over the past 2 or maybe even 5 years is that the large caps have not been doing very well.
Yeah.
Right? And the reason is because if foreign investors come into Malaysia, usually they can only buy large caps.
That's their mandate.
Yeah, no, and also because they're so big, right? Their fund size. So when their fund size are so big, and they can only buy those big caps, and they are leaving, guess what? The large caps are not going to do as well. And so only the small caps did well because that's what retailers can do, right?
Exactly.
Retailers don't want to buy the Nestle's and Maybanks of this world, although some do lah. But Yeah, and you can see on the
Yeah.
screen, right? You see Genentech, MPI. These are the highest gainers: Genentech, MPI, Sam Engineering. Maybe not Vitrox.
But these are all sub 1
Batu
billion.
Kaman.
I
Yeah.
mean, besides for Vitrox, Batu Kawan,
Or
I
maybe
think
DNO, but
these are all sub 1 billion companies.
exactly. But
Yeah.
then you look at the top losers. These are your Hatas, FNN, Nestle, Supermax, Dutch Ladies, KLK. These are your large caps.
Correct.
So I'm not saying their fates will swap, right? I'm not saying that the big gainers are going to be the large caps and the small gainers, small caps are going to be the losers. I think they're both going to do well.
Yeah.
I think that, when the stock market of Malaysia has not moved for, 7-8 years now?
It's flattish.
But our economy has grown.
Yeah.
That's a fact, right?
Yes.
So for me, it's undervaluation, right, in that sense. But this doesn't mean that if you simply buy any stock, it's going to do well.
You have to understand, like, I'm glad you brought up this point about the large cap and the small caps, because you have to understand the rules of the game.
Oh, yeah.
When you understand the rules of the game, when you're looking at foreign guys coming in, right, they have certain mandate, they have certain restrictions where they invest their money, and the playground that they play is what you see in red today. That's why you see that impact. Whereas the retailers, the playground that, okay, for better or for worse, are in a small cap, maybe due to several factors. One is there's a lot of information dissemination today is very different.
Yeah, that's right.
Yeah, you look at forums like i3 or forums that are run by our good friend Rondi at Stockbait. These are the new forms of media that people actually look at, and that's where retailers actually, in a way, rely on the sources to make an informed decision. And the instis actually look at it very differently. The rules that they play are very, very different.
Oh, yeah.
And that's why you see top gainers, as I said last year, 2020, retailers were, in a way, kingmakers. So don't take this information, what we're sharing on screen, at face value.
Yeah.
Understand what is the underlying reason and the rules of the game that are being played in these two areas. Yeah.
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 As usual, guys, many of y'all like to send certain research reports to us, and they're all amazing, a lot of them. But if you really want to join our research team, right, where we have guys, in investment banking working for us, engineers, all sorts of people, really smart, really hungry to learn more about stocks and to discover new stocks, great stocks, just continue writing a research report. Or if you have not written, you can consider writing one. Make sure they are in Google Docs or Google Sheets format, and make sure you do your research, actually do your research, and then send it to us, right? Don't just say, hey, what do you think of Maybank? What do you think of Nestle? We will not entertain this sort of emails, okay? So, yeah. All right, John, let's start with KNM. If you look at the year-to-date price, is up 34%, very respectable in this environment as well. And something big is happening, right, at KNM.
Yeah.
Share with us.
MAA Group just became a substantial shareholder, bought it through the open market, and their stake now is about 7%. But what was also interesting was, which I didn't put up on the slide, is that the founder, Engineer Lee, he's actually sold a big chunk of his stake, the founder of the company. The wife and him started paring down their stake, and their new CEO, Mr. Tan, is actually tasked with turning around the company. So I don't know whether MAA saw something that of value. Right now, they are guessing that the net assets per share should be about 53 cents. And if they're buying, MAA got it for roughly about 22.7 cents. So probably what they are thinking is maybe that upside of the extra 20 cents. The
NTA, right?
The NTA kind of that one. But again, you see, KNM has been bleeding all this while. I mean, I've invested in them when I didn't know how to read financial statements way back then. Bought it at $3. I think I exited at 30 cents or something like that.
Yeah, but before we move there, right, I just want for viewers, right, what does KNM actually do?
They are in oil and gas, petrochemical. They started off the business manufacturing pressure vessels, but they have actually moved on to quite a diversified business in a way. Started going into renewables, petrochemicals, oil. They've also bought certain companies in Germany. This Borsig, if I'm pronouncing correctly, Borsig.
Right.
Yeah, but along the way when they were doing that and they were still bleeding, they raised a lot of money. And I think that's where knowing the industry, oil and gas industry, where it's very capex intensive, a lot of it is reliant on oil and gas activities and contracts. You need a steady pair of hands to run the business. And over time, I've not been very impressed. Because
Right.
you have companies that just recently listed like RL Reservoir Link, very small market cap, very niche business, but very steady pair of hands. You look at the results, the financial results speak for itself, right? Here you have a conglomerate that has been around for so long. I dealt with them personally as a part of the project management team. We bought vessels from them before, and I was not too impressed by their project delivery. And it goes to show in the financial results. So every year revenue was okay, rising, falling, but you look at their cash flow from operations. It was probably in 2013. It looked a little bit more impressive. 2009. But that was about it. The years after that subsequently was like in doldrums. And they kept the company afloat by private placements and a lot of... Yeah. So the usual, MJ.
Usual suspect. I think the problem with that NTA mindset, right? And again, we never really know why MA bought into it. Could be NTA, could be whatever. Maybe they know something we don't.
Yeah.
But I think buying into NTA, you always have to be very aware of why something is below NTA.
Correct.
Right? Why is the people think that if you buy something below NTA means that the value is undervalued, right?
Yeah.
But you have to think also why the market is valuing it below the assets, because investing is not just the fundamentals; it's also what people think of the stock, right? And NTA is an accounting number, and it could be accurate, it could not be accurate, right? And if you think about it, the assets that KNM hold are related to oil and gas activities, which has not been very interesting over the past year or maybe even past decade, you can say, right?
Yeah.
So all these assets, right, they may not be revalued, and then the value of an asset is not just the asset, right? It's the ability for it to generate future cash flows. Like that's why our view is that like the house that you stay in is not an asset, right? It doesn't generate cash flow because you're staying in it. So therefore, when we do our personal net worth calculations on that, it's not part there, right?
Yeah, exactly.
We don't count house equity, home equity as net worth, right? We do count maybe a rental property, let's say.
Yeah.
So I think it's the same here, right? Like, why does anything have value, and why does a house or why do all these oil and gas assets have value? Because they can generate cash flow, and right now, KNM's cash flows are not as good as it could be.
Yeah.
Right?
They're not sweating the asset.
But so the question is for KNM shareholders is that with the owners selling out and with MA coming in fresh cash, you have to ask yourself, why is KNM not doing well? Is it because of management or because of the industry? And sometimes it's a mixture of both.
Yes.
But based on what you're telling me, it could be the management.
I use the analogy of what you brought up about the house.
Yeah.
A house, let's just say, even though it's an investment property, for it to generate cash flow, what do you need? You need a good rental agent.
Oh, yeah.
You need good listings. You need a good tenant. So all this involves people. And when you look at any asset, it's how well people around that ecosystem sweat the asset that generates the cash flow. And in this case, what I viewed from KNM was that they had pretty good assets, but it wasn't being sweat enough. And when you don't sweat the asset enough and you don't generate cash flow, what you do is you need external sources of fund to uphold the company. And you, like what I keep on telling people, they can tell you a lot, especially our students. They can tell you a lot of stories, but once you see the numbers, you can see a very very clear pattern. Which one is good quality management? Which one is like telling you a lot of promises? And I mean, we've seen it so many times, MJ. They promise you the stars and the sky, and then when you look at their track record of the numbers, I'm not talking about quarter to quarter result. I'm talking about, let's say, 5 years, 6 years, 7, or even 10 years kind of results, right? You know whether they fulfill their promises, put it this way. And, obviously, if you look at where the market actually views them, their latest private placement was actually rejected.
Huh.
They have done, so if you look at the screen, Angel, you can see the screen, right? They had 1, 2, 3, 4, 5. The latest one was rejected, but prior to that, they had 4 private placements since 2019 alone.
I mean, there's only so much you can do.
Yeah,
exactly. I mean,
exactly.
just to wrap this segment up, right?
Yeah.
So if you're holding KNM shares now, what do you do?
To me, honestly, if I'm holding, I'd rather sell and wait until these guys
or just go buy something better.
Or they have tons of companies that are much better than that. Even they say that, I still want to focus in oil and gas. I'm telling you, there are tons of companies with much better prospects. I mean, you just look at the capital they raise against the cash flows they're bringing is just not convincing. Yeah. If it's just purely based on asset play,
I have to wait.
Yeah, have to wait.
Well, guys, if you like this sort of content, as always, remember to give it a like so that, helps us with the algorithm. Comment, subscribe, and of course, click on the notification bell, key notification bell, so that you know when new videos are out for you. All right, John, next one. This is something that people actually in our previous Genting video asked us to talk about, which is Las Vegas Sands. Resort World Las Vegas.
Yeah.
And the news just came out that they are making $650,000 EBITDA.
That's roughly 2.4 mil, about
EBITDA.
3 mil EBITDA.
So for those who don't know, unfortunately, based on this news, I'm going to have to give a small lecture on what EBITDA is. So again, when a lot of people, and I've had family members come to me, tell me about, Genting is making EBITDA, X amount million a day, right? So it sounds really, really good. For information, EBITDA was actually a number used in the 80s to justify paying a higher price for assets.
Yeah.
It's actually an accounting term that they created in the 80s so that it makes the assets that usually this is by investment bankers, it makes the assets that they're selling look a lot cheaper. Now, I'm not saying that Genting is doing this, obviously. This is a report that they just report, and then news articles are just piecing words together to make it look interesting.
Yeah.
But for those who don't know, EBITDA is earnings before interest, taxes, depreciation, and amortization. And if you look on the screen here, if at $650,000 a day, they will of EBITDA, they will be making $900 million a year, which is a lot, right?
Yeah.
And typically, the US segment of the business only makes about 20% of the sales. But now, it should be a lot higher. Now, here's the problem. EBITDA, think about it, right? When we buy a company, imagine if we could buy the whole company. And so if you're the owner of a company, you always want to know, of course, number one, what is your revenue generation strategy, right? Your marketing, your products, your pricing, and all that, right? So we're not going to talk about that. We're going to talk about the other component, which is cost. Now, if you think about it, EBITDA, earnings before, interest, taxes, depreciation, amortization. Okay, so let's move on to the next slide. Now, if you're a business owner, right, would interest, for those who don't know, interest means the amount of money you pay for your loans.
Finance costs,
Is that important to you as a business, John?
If I say it's not important, how? I'm just kidding. It's crazy important.
So if you look at the screen, right, roughly every year they make about 1 billion. Sorry, they have finance costs or interest at about 1 billion.
Yeah.
Right. So if you prorate, right, 250 million ringgit.
Remember last week we covered last week we covered Seba, and their finance cost alone was 250 million.
Yeah,
Yeah.
exactly.
Yeah.
So I mean, why would you exclude it? Is my question.
Exactly.
Right? Interest is very important. Yes, EBITDA does give a sense of the operational performance. Don't get me wrong, but as a business owner, you want to own. You want to know what actually falls into your lap, right? In cash.
In a way, if we don't take interest or finance costs as an important factor, one guy could just buy up the entire Las Vegas, everything put on finance, but then you minus off your finance costs.
Yeah, then it look very good, right? So that's one, right? And the second thing is taxes. It's not here, but taxes. I mean, guys, everybody has to pay taxes. But I can understand why taxes are excluded, because you want to see the operational performance.
Correct.
So, okay, fine, no taxes. So next. Depreciation or amortization, that's very interesting. So this is Q2, which is 6 months. So they have about 2.5 billion in depreciation every year.
Yeah.
And it's true. It is not a economic cost, meaning it's not like
it's not money coming out of the pocket.
There's no money coming out of the pocket.
Yeah.
So that's why they excluded it.
Yeah.
But here's the problem. Depreciation, although it's not is a concept, but it is true in that your assets do depreciate.
Oh,
right?
yeah. It's expense. It's actually expense off.
Exactly. So, that is why would you exclude it totally? Or if you exclude it, then you should be looking at the next slide, which is the cash flow from operations and the amount that they use to reinvest into the business to maintain it.
Yeah.
So even though depreciation is not a real cost, what is a real cost is capital expenditure, which is, if you see here, purchase of property, plant, and equipment, the second yellow line here, right?
Yeah.
So I'm not sure why there was a jump. I didn't do my research in 2021, which is on the left side. But on the right side, it's about 2.8 billion. And guess what? What was the depreciation roughly? Also about that amount, right?
Yeah.
Or it's higher. It's way higher, right?
Yeah.
So when you look at the free cash flow, which is what counts at the end of the day, the company is still struggling, right? But you see, when you read
EBITDA,
the EBITDA, or when you read the article, you think that things are great. And to be fair, it's great, right? It's good for Genting that they're doing this. But the question is, how much, right? How much can they make from this US one? So I did some valuation. In the next slide. So for those who don't know, so roughly about 20%
is
of the
the revenue breakdown per geography.
Right. So next slide. So basically, right, if let's say you make 3.8 billion a year from the US segment only, roughly interest of 200 million, depreciation of 500 billion. So that's basically about 2 billion a year in profit, That's a P of 10 of the US business alone, not including the palm oil.
Discount whatever other geography reasons.
So that makes it very cheap, right? But of course, there are several things you have to ask, right? Is this 650 because the US has opened up, right?
Yeah.
And is this 650 million US dollars here sustainable? Maybe it is, maybe it's not, right? I think that we cannot spend this whole session just to talk about all the different possibilities. Otherwise, it'll be just a spreadsheet,
analysis, spreadsheet analysis.
But another thing to take note of is that in globally, right, not just Malaysia, we have what we call the conglomerate discount.
Yeah.
For some reason, conglomerates will always be valued lower. So it doesn't matter if you, let's say, what a lot of people are doing with Genting now is that they take the US, they take the palm oil division, they take the Malaysia, the Singapore division, then they kumpu everything, they group everything together and say, hey, each of these is worth $1 each for this segment. So we got $4. These are all worth $4, but it's trading at $2. Means undervalued. Not the case. For whatever reason, and it's still a mystery to me, conglomerates, i.e., whenever there's a connection of many, many different companies, tend to not do well and tend to be lower value, which means, right, the undervaluation can stay there forever.
Yeah.
Except Berkshire Hathaway. Berkshire Hathaway is a bit different.
No, but Berkshire Hathaway, it's a very decentralized kind of way of running the business. In a way, they value the independence of these subsidiaries. and in a way run amok. Whereas I think a good example of where conglomerates discount actually happens, and you only get that unlocking of the value when they did is Syme.
Yeah.
Syme, they had an oil and gas division, property division, plantation, and all that. And the method that you just mentioned earlier about this sum of parts, I think that is a bit of a flawed valuation method, because what synergy do you have when you have such a diverse business? In Syme's case, maybe the plantation and the property development, they have synergy because of land banking, the land. But hospitals, plantation.
The thing is this, right?
Yeah.
And let's use Berkshire for example. So with Berkshire, they position themselves as more like an asset management.
Oh yeah, exactly.
Right? It's like I'm just buying stakes and I'm not getting my hands dirty.
Yes.
So I think the problem with conglomerate is that they get their hands dirty, and the market tend to see that, and I think rightly so. The market tend to feel that it's very complicated, and so they just want to ignore. That people prefer like a Tesla, right?
Yeah.
It's very simple. You're selling cars.
Very focused.
A very cool car, eco-friendly car. The future very clear, right? Like you know what's it all about.
Yeah.
But if let's say it's a Berjaya Corp or Syme W, what are they about? Like what is the ethos? Right?
Can you imagine a central HR, but then he has to manage hospital guys.
Yeah.
He has to manage different quotes of the business, but centralized functions. Wow.
Very difficult. So you're right. So that's why people need to be aware of the conglomerate discount. So I know a lot of people, and I'm very sure, let us know in the comment section if you disagree.
Yeah.
But I'm pretty sure in the comment section people disagree because, they did the right. It's the rational thing, right? You take all the parts and then you sum up.
Correct.
And then you analyze. But I think, that's where theory and reality can be a little bit different.
Correct.
Okay, this comes to the end of our quick dive. Hope you enjoyed it. If you really liked it and you think some of your friends will find it useful, do share with them. Follow us on our other social media platforms, Instagram, Facebook. We have a Telegram group. We have TikTok as well.
Soon to be Discord also.
Yeah, Discord maybe soon, right? So, look forward to seeing you guys next week.